Good morning. I wanted to talk about Supermicro today, so ticker symbol SMCI, and I wanted to talk about the recent movement and whether or not I'm investing in it. So a lot of people say that after the auditor quit, it fell down way too fast on peak fear. Just everyone was too fearful, and then everyone sold, and that presented itself, or that presented a buying opportunity. And I personally am a little bit too worried to do so. I just feel that the fact that the auditor quit shows that there's an underlying accounting problem with the books, that we shouldn't trust the books. So the main reason why a lot of people are reinvesting or starting to buy back Supermicro is that they're saying that based on the books, it's undervalued, right? Based off the business and based off their revenues, it's undervalued. I don't trust the books. And you might be wondering, well, I mean, you stayed invested in Aspire Global while they're still redoing their books, after they're still redoing their accounting. Why is this any different? See, the difference is that Aspire Global, they're working with their auditor. They're working with the debt company, right? They didn't quit. So whereas in the other case, in my opinion, Ernst & Young, was that their company? I think it was Ernst & Young. They straight up, it just got darker. But anyway, Ernst & Young, they straight up were like, this accounting is way too ridiculous. we can't. So then they left, right? It's a different type of reaccounting. One is straight up like they see either massive problems with the accounting or almost fraud, and the other one is, oh, we're redoing how we're calculating our books, how we're showing our numbers. So in my opinion, it's a little bit different, and it's actually really different. But I do see the argument, right? Like, if you're making money, props to you. I do see the argument that it did fall down really, really fast, right? It went from $100 to $15. It dropped like 80% in a few weeks. That's crazy, right? So like, I do see the ability to get profit. Looking at the chart right now, it's on my laptop. I would say that key levels to look at are 40, maybe like 30, maybe 39-ish. 50, I have a line at 49, like 50-ish. And then I have a descending line at 60 that kind of matches another support level at like 6170-ish. So, and then also a smaller support level at like 55-ish. Those are the prices I'm looking at for Supermicro. In case you were wondering, obviously this is just like preliminary technical analysis. I didn't really put too much work into it. I just saw like general places where things peaked and things valued. So I mean, that's really it. But if you zoom out, the crazy thing about Supermicro's chart is, if you put it on the weekly, it looks exactly like if you're into investing, or if you looked up investing influencers, you might have heard of Timothy Sykes, who he invests in penny stocks, right? He invests in both buying the rip and also selling the dip, and selling short the dip, right? And then the weekly chart for Supermicro looks exactly like his chart for pump and dump. Just so it kind of just looks like Supermicro is just a really slow pump and dump. I'm not saying that's necessarily what it is, and I really doubt that is what it is. Like, Supermicro actually has fundamentals. Like, they have a high value customer, NVDA namely, and it makes sense, right? So we have the takeoff, right? I'm just gonna read it off, right? We have the takeoff, we have the little bear trap, we have enthusiasm, we have peak, we have a bull trap, and then we have fear, capitulation, despair, right? And then now we're currently returning to the mean. And if you zoom out all the way back, you see that we're at a support level right before basically 2024. So I do see how, yeah, we could be memeing back up, right? We could be going up to recent support levels. As I said before, 44, I think. Let's see, no, 40, 50, 55, 60-ish. Those levels are, in my opinion, pretty noticeable support levels. But there's another technical analysis expert, I'd say, that I follow. Her name is YouTube channel is Humble Trader, or Humble Trader, I think. And she says she has something called the bag holder chart, which is something that worries me, is what Supermicro might be for anyone that's investing in it and that's hoping for a spike up to peaks now, which is basically after an initial peak and an initial drop, it'll go back up, and then anyone that's already lost a lot, they're like, oh, this is my chance to get out with losing only half of what I would have lost, right? Or only a quarter of what I lost, or only 75% of what I lost. And when those people sell, any of the new investors are gonna get reamed some more. So I forgot what she called it. She called it like the bag holder something chart. I would say to be wary of, specifically for this chart, because it could happen, right? The other problem with investing in Supermicro right now is that the majority of the volume for the past year, right, it was above this price point. When I first started investing, I was always confused. How can there be both a Santa Claus rally and a tax loss harvesting? How can those two exist at the same time? It makes no sense, right? Because both of those are literally just in December, or like in the last few weeks of the month, last few days of the year, last few months of the year, last few days of the year, stocks go either up really, really high or down really low, right? How can those happen at the same time? So in my opinion, right, this is just me looking at patterns, so not necessarily true, right? But when you have profits, when a stock has gone up the entire year, the people that are tax loss harvesting are the people that shorted the stock. And there's no reason to tax loss harvest a winning stock, because you don't want to realize gains at the end of the year when you're dealing with taxes. Versus, so that's what kind of either stabilizes a stock or brings it up, right? Because the people that are shorting the stock will tax loss harvest, right, that stock that's gone up, and that will just, and by tax loss harvesting, when a short tax loss harvest, they buy the stock, so the stock goes up even higher. Santa Claus rally, right? On the other hand, tax loss harvest is if a stock goes down a lot, right? Then the people that are long the stock, right? They're gonna tax loss harvest. Just when it goes down, people tax loss harvest. When it goes up, people the shorters tax loss harvest, right? Supermicro, the majority of 2024 was above this point, right? If not majority, then all of it has to be majority because of the past like week and a half or 2 weeks. But the majority of 2024, that stock was above where we are right now, $36, right? $37 ish. I mean, I can only see people tax loss harvesting Supermicro, right? So that creates downward pressure on the stock, which is what makes me even more worried about even like a little bit, or throwing a few dollars into it just to see what happens. I can like when people have the opportunity to, okay, I can lose less money and I can tax loss harvest, that would be around this time, right? And I can only see if big money actually invested in this stock when it was rising up to 70, 80, 90, $100 post split, then I can, like, a reasonable and like responsible money manager or fund, they're gonna use this opportunity to get out with like scrapes, with scratches rather than broken bones. So that's definitely kind of my opinion on Supermicro, and whether or not I'm investing in it. I'm not, but hey, I do see opportunity. There is definitely opportunity in making some money, right? Which people have already made, right? It doubled, and I'm sure it can do more. It's just I'm a little. You can, okay. Yes, I'm very risk on, but then like this is a little bit more risky for me, I guess. I'm just not comfortable with it. The other thing I wanted to talk about, just on the topic of semiconductors and things like that, is I was doing a little bit of research into, or not research, but I was just doing a little bit of thinking into NVDA and how high it's gone, right? And people keep saying, oh, it's an AI bubble, it's a semiconductor bubble, and they've been wrong the entire year, right? But I do see a possible I guess, problem or possible critical point of failure, or yeah, single point of failure for NVIDIA, which is specifically TSMC, right? They basically have all the foundry business for NVIDIA, right? They're manufacturing all of those things. NVIDIA is doing all the designing, right? But then TSMC is doing all the manufacturing, all the on the foundry business. I wanted to relate this to a recent event that happened with McDonald's. Do you remember McDonald's? I'd say a few weeks ago, the E. coli outbreak, and then they got in a bunch of like their stock dropped a lot. I'm too lazy to look at it now, but McDonald's stock dropped a lot, right? And because they had a single source, they had a single supplier of onions. So this kind of creates this idea of, if you only have one supplier or you only have one manufacturer, if anything happens to that one supplier, to that one manufacturer, then that creates like a chain reaction to all these other businesses. It'll if something happens to TSMC, it'll mess up NVIDIA, which will mess up SMCI, right? In the same way, if they're relying too much on just efficiency, relying too much on sourcing from one supplier, which it does, I will give it to them, it does make your supply chain, it does make your what's it called? It makes everything more efficient if you only have one supplier, because you don't have to deal with multiple people. Just think of it as, for example, if you're buying bread, right? It's much easier to just buy 2 truckloads of bread from one company than it is to buy 1 truckload from 2 companies, or like a fifth of a truckload from, or whatever, from like 10 companies, right? Because think about just like the parking logistics and the offloading, onloading, opening, like scheduling, right? It's just much easier to just have one supplier and for everything, right? So, but that does create centralized points of failure. And that's also one of the reasons why, if you look at what happened during the pandemic, globalization happened, and then we realized, oh, we're screwed, right? Supply chains got destroyed because just-in-time shipping, and also because centralized points of, like, you relied too heavily on one specific supplier. So that is, I would say that is a bear case for semiconductors, but you can say that, okay, I mean, so that's also why I would say that a benefit is that if the U.S. relies so heavily, and they know, the U.S. obviously knows that they rely really heavily on Taiwan's semiconducting company TSMC, right? So I don't see lowering support for Taiwan, which means that we can basically be, I hope we can be more assured that there won't be a big war that happens between China and Taiwan, or China and Taiwan, which will lead to what some people predict to be World War III, right? We don't see as much of an escalation in conflict, just because if you have 2 people with massive guns and a bunch of like artillery and everything pointed at each other, chances are a conflict's not going to start, because both people are scared that they're going to blow off each other's heads, right? I guess that is a benefit of having such a high priority company inside area of potential conflict. But yeah, so those were just some things I wanted to talk about for SMCI, and also my thoughts on the semiconducting business, and possible things to worry about, possible things that would be very prone to black swan events because of the centralized points of failure. Those are just my opinions. Nothing else really much to say. If you're making money, hey, good for you. Have a good day.